Peace and love, good people. Peace and love. So let's talk about chart art. All right. So let's start with the short-term bullish pennant. All right. So you can see by this orange line on the chart here, it is showing you how the higher lows are being connected with the lower highs near an order block, preparing for a breakout outside of that trading range. But let's find out more about what a pennant actually is from the daily chart. Now keep in mind, these are patterns on the daily chart, and Webull is only showing us the indication for the pattern on the daily chart, not the smaller time frame. So that's important to note. All right, so what is a pennant? All right, so a pennant follows a steep or nearly vertical rise in price and consists of two converging trend lines that form a narrow tapering flag shape. The pennant shape generally appears as a horizontal shape rather than one with a downtrend or an uptrend. Apart from its shape, the pennant is similar in all respects to the flag. The pennant is also similar to the symmetrical triangle or wedge continuation patterns. However, the pennant is typically shorter in duration and flies horizontally. All right, so you can look at these things when you get some more time. So important characteristics: trend lines. We talked about trend lines, volume, duration of the pattern. All right, and some possible trading considerations, but what I want to focus on is the criteria that supports a pennant. So volume volume should diminish noticeably as the pattern forms. A strong volume spike on the day of the pattern confirmation is a strong indicator in support of the potential for this pattern. The volume spike should be significantly above the average of the volume for the duration of the pattern. In addition, the volume over the course of the pattern should be declining on average, and we can find the volume at the bottom of the chart underneath of the candles. Now, criteria that refute the pattern. All right, duration of the pattern. According to Martin Pring, a pattern that exceeds 4 weeks to develop should be treated with caution. After 4 weeks, interest in the stock is likely to decrease, to point that it is unlikely to continue in a strong uptrend. All right, so you could be looking at 4 candles on the weekly time frame as well. No volume spike on breakout. The lack of a volume spike on the day of the pattern confirmation is an indication that this pattern may not be reliable. In addition, if the volume has remained constant or was increasing over the duration of the pattern, then this pattern should be considered less reliable and may actually reverse. So what is the underlying behavior? So what's actually happening in the market that creates this pattern on the chart? This pattern is effectively a pause and an uptrend. So we're talking about that consolidation phase. All right, we're talking about the boarding phase or the high altitude phase. The price has moved ahead of itself with a steep rise. Therefore, market activity takes a break before continuing the uptrend. This pause is reflected in the decreasing trading volume. Look at those volume bars at the bottom. I'm telling you, it's a game changer. Similarly, a spike in volume marks the resumption of the uptrend. All right, the pennant. Peace and love, good people, and I hope you get rich. Please subscribe to the channel, leave a like, comment down below if there are specific chart patterns that you would like for me to review. Put them in a comment below. If you've seen a pennant this week, I want you to put that in the comment section below. All right, peace and love. I hope you get rich, and I look forward to connecting with you all again in the next video. Take care.